So now we're pretty well done with the plant assets, and we move on to natural resources. And these, the accounting for all of these, very, very complicated. Fortunately, we don't get too complex at this point. We're talking about natural resources, timberlands, oil and gas, and mineral deposits. You know, coal mines, gold mines, aluminum, all those good things. The difference between these and your trucks and machinery and other plant equipment is that these have to be physically extracted from the earth, and they are replaceable only by an act of nature. In other words, not man-made. So those are the two characteristics that get you to classify something as a natural resource, assuming they're used in the operations of your company. We convert the natural resource into basically inventory by, if we have timber, we have to cut it down, and if we have oil and gas, we have to pump it out, and mineral deposits, we have to mine it. So when we go to initially costing all of these things, the initial cost follows the same principle as with our other plant assets. But our natural resources, it's going to be the, cost, plus, it's the initial cost, what you paid for it, plus the costs of getting it ready for its intended use, okay? For its intended use. So in the case of timberlands, that would be things like you need to build the logging road, so some of that would go into the costing. For oil and gas reserves, there's certain infrastructure that needs to be done in order to extract it. Mineral deposits, you have all of the mine shafts and things like that. The principle is the same. Fortunately, you'll just be given the cost, and that's it. You don't have to worry too much about the rest of it. We have the initial cost. We don't depreciate these, we deplete them, so we will have depletion of natural resources. So as they are used up, we take depletion expense, and usually we will just do it against the asset itself, either mine or timberland, or some companies will use an accumulated depletion account. So you can go accumulated depletion, or you can do depletion expense and the asset itself. I'll just say mine here, okay? So you reduce the asset itself. Because with this, it's not like the truck is still sitting there. That ore it's gone, okay? So we use depletion. Okay, so as with calculating depreciation, it has to be rational and systematic, and we're generally going to use a units of activity method to do this. And so the first step in figuring it out is you have to estimate the total amount of the resource. That would be, okay, so you have the total amount of the resource. What other information you need? You need the total cost. Okay, you need the total cost of the resource. You've probably got that. This will be an estimate. Okay, so you have the total cost of the resource. Okay, and so what we're going to be doing is we're simply going to take the total cost and divide it by the total estimated units. Okay, so the estimated units of whatever it is. And that would give us a depletion rate. Okay, and then you have to figure out exactly how much you extracted this year. And so then you're going to do the, actual units extracted times that rate will give you the depletion expense for the year. Okay, so this would be applying actual units, could be tons of coal, it could be barrels of oil, board feet of lumber. It depends on what industry you're in and what you're counting up. The estimated total amount of the resource. Well, how many trees are there in this forest altogether? How much mineral deposit is in this mine, and how much gas is under the ground? This is the things that accountants don't figure out for themselves. They call in the geologists or the specialists to come up with estimates like that. The accounting for this is very industry specific. But the basic principle that you have to know is it's really a units of activity method where you've got the total cost of the resource, estimated total number of units of the resource, gives you the rate, actual units times the rate gives you the depletion expense. I think I will do a separate video, and I'll do an example of this, probably brief exercise 911.